Hey, Ivan from the EV Stock Channel here, and today we're covering Tesla's Q2 financials in a visual way. So if you like charts, you're in for a treat. But before we begin, thank you to all the Patreons that make these episodes possible, and as always, all content is simply my opinion and not financial advice. So we all know Q2 was a unique quarter in which the Shanghai factory was shut down for an extended period of time, which dramatically impacted the number of vehicles manufactured and sold. But despite all these challenges, Tesla still reported $16.9 billion in revenue. That's compared to $12 billion in Q2 last year, meaning despite the Shanghai factory shutdown, Tesla still grew revenue by 40.8%. Now, Tesla breaks revenue into three segments: auto, energy, and services/other. And I love this illustration from Hypercharts, which shows all three segments on one chart and highlights just how big of a portion automotive revenue is compared to the other two. However, when we look at the energy segment on its own, we can see that Tesla reported $866 million, their strongest result going all the way back to Q3 of 2018. And then, when we switch to services, we can see that Tesla recorded yet another record in this segment, $1.46 billion. But look at the trend. I mean, it's up 54% from Q2 last year and reminds me of Apple in the early days with App Store revenue. This is definitely one area of Tesla's business that's not getting enough attention. Moving on to GAAP net income or profit. Tesla recorded their 12th consecutive profitable quarter of $2.25 billion. That's double that of Q2 last year and could have been as high as $4 billion if it wasn't for the Shanghai shutdown. It also shows you just how strong of a position Tesla is in when so many things go wrong and yet profit doubles from the same quarter in the previous year. I mean, for those that remember the times of 2017 and 2018 when Tesla was in production hell, it was known there were going to be major losses. The question was just, how big will those losses be? And it's amazing to see just how far Tesla has come in just a few short years. Next, Tesla reduced their long-term debt by a further $200 million to just $2.9 billion, which means a reduction in interest expenses for future quarters. Meanwhile, cash on hand has increased to $18.3 billion, the second highest total in Tesla's history. Also, think about this. Tesla have been paying down debt over the last few years, and now we could see record profits along with not having to pay down debt, which means Tesla's cash on hand could rise significantly. So what will Tesla do with these additional funds? Acquisitions, stock buybacks, dividends, or maybe a one-time dividend to reward long-term stockholders? Well, your guess is as good as mine, but it'll be interesting to see how things play out. Meanwhile, Tesla's gross automotive margins did take a hit this quarter, but that was to be expected as Tesla are in the middle of two production ramps in Giga Berlin and Giga Austin. But look for these numbers to improve as these two factories start to move up their production S-curves. Next, here is Tesla's average selling price per vehicle, with the average selling price increasing just over $6,000 since Q2 of last year, and this is likely to continue to rise as the latest price increases start to come into effect. So now that we've covered some of the key metrics, it's time to look forward. And in my opinion, there are multiple tailwinds that will combine to really make Q3 and Q4 record quarters on many fronts. There should be record high deliveries, as Zach reinstated on the conference call Tesla's optimism of a 50% delivery growth rate this year, which would equate to Tesla delivering around 1.4 million vehicles for the year, or 836,000 vehicles in the final two quarters. That's compared to just 564 in the first two. Not to mention higher average selling prices as price hikes come into effect, along with economies of scale from increased production at Giga Berlin and Austin, which combined should increase Tesla's gross automotive margins, and I personally can't wait to see how the combination of these three factors play out. So that's all for today. However, stay tuned for the latest two episodes covering Tesla's early history to be released soon, along with a lot more content that's being worked on behind the scenes. So till then, have a great day.